Okay, let's talk about Under Armour, which is an interesting Baltimore-based company that burst onto the scene in recent years as an additional player in the sports apparel and even footwear market, and really looked very, very, very hot and has had a real collapse, in a sense, a fall from grace, with results recently not showing the sort of growth people were looking for. So it sagged back to a market cap of $7.53 billion, which is still big, but you know. And at this level, even though the share price has tanked, it's still on a price-to-earnings ratio of 36.66, and it has not been a dividend payer. Let's show you what that share chart looks like. It's not been a happy time. It kind of fell and then recovered and then fell again, and has since been drifting away. I know this pain personally because I own a position in this company.
So I think this is quite a good example of the perils of growth investing. What they did have was sort of a period, 6 years of straight growth. They looked like they were going to become a number 3 behind the other two stocks that we mentioned. And charismatic CEO Kevin Plank doing clever things like Nike had done to some extent with celebrity endorsement. They got an NBA star, and they also got golf stars, and they were also moving into the sneaker space, which we know is one of the key areas.
That's Steph Curry and what's his name, the golfer? Jordan Spieth.
That's it, exactly, So your sports knowledge is better than mine. So they had some initial successes, but what we've seen is a significant slowdown in their growth. Still growing, but only around 9%. But importantly, also they've been losing sales and going backwards in the footwear space in the US, which is a key market.
Because the same story, really. They also have an online channel, but they were quite heavily dependent on some quite nice relationships with Dick's Sporting Goods, Sport Locker, Sports Authority, some of them that have been coming unglued. So what happens then in that case is that the share price kind of downgrades and down rates, and people's expectations are significantly damped. There were also some executive departures. But the stuff itself is pretty cool. They've got really nice range. I run in a pair of their shoes every other kind of couple of days. I like their sporting apparel. They've got fantastic, loose fit, medium size, and the textures are great.
So there's, I think, nothing wrong really with the product, but just shows you how competitive it is, and also the sort of different market segments that you sort of have to crack. Also that athleisure fashion type market really to stay relevant and inside consumers' minds, and they haven't quite got that. It's more functional sportswear.
They've experimented a little bit with high fashion type items, but they're quite expensive, and I haven't really, even as I've been keen to support that, visiting their stores, the stock hasn't really always been there.
I mean, it shows how difficult it is also to become a global brand. I mean, they really sort of started out of nothing. I think they gave away originally those sort of tight-fitting Under Armour shirts to some football teams, and that's how they got going and with momentum. So done a great job to really sort of become a contender, but I guess it's going to be a rocky road getting there.
Yeah, because now, Kevin Plank is still at the helm. He's still the dominant shareholder. He's got some interesting things going on. There were a few missteps with, being on Trump's council and then coming off it and all this sort of thing. Anyway, how do you feel about it? Is it recovery, turnaround time, or do you think it's still too early?
Look, it looks, I mean, you can see how the P, notwithstanding the share price is halved, is still at 36, so it shows you what the sort of expectations were sort of very outlandish. I'd rather want to see a sort of consolidation, maybe improvement in the product range in that athleisure category, and take it from there. So I'd put a pause on it, a hold, so not hot for now.
Look, I agree with you. They also have to cement the advantage, because a lot of what drove the share price higher was the Steph Curry relationship around the shoes, the basketball shoes, and that's a tough game in which to operate anyway, because there's some formidable competitors. But you know what, I'm going to go hot on it anyway because I own it already. And my general sense is that sometimes one can be rewarded for being in something when the turnaround comes, even if you do have to wait for 6 months or a year or something before it happens. Okay, so that's that.